do not need expensive stocks to run the wheel options trading strategy on. Here are 5 stocks, all under $20, that I gladly own and get paid to say maybe. Yo, what is going on, premium chasers? I hope you're having a God blessed day. Today goes out to you guys that have smaller accounts and you're looking for wheel strategy stocks that are like quote unquote cheaper, right? Now, just because these stocks are cheaper, under $20, doesn't mean that they're bad companies by any means. These are stocks that I personally love running the wheel strategy on to collect that premium income from those silly options buyers. So today I'm going to be sharing with you guys and also going into some beginner techniques on choosing your entry and exit points. So let's go. First one is Rocket Lab. You guys have heard me talk about this one on the channel a few times. This one is just at our $20 budget. Other ones I'm going to show you here in a second are a little bit more budget friendly. This one's more on the high end here and is definitely more of a speculative play for sure. However, I'm a big believer in Rocket Lab. I'm not going to exactly sell you on the reasons why, right? Go do your own due diligence. You're an adult, right? But this is a great company that offers fantastic premiums, especially for smaller accounts, okay? So let's go take a look at what those premiums are looking like. So I'm going to go to RKLB. And on our options chain, no matter what brokerage you're using, you'll be able to see the options chain. We're going to click sell a put. And then I always like to go 30 to 45 days out. So we'll just click 35 days. And you could see, for example, the 19s right here. Let's find like a realistic delta that I would actually go for. I like to be about 0.20, 0.30. Here's the 32s. Let's see the 7.5s. This is at a 0.29, right? So let's see what our return is actually going to be on that. So on our cash secured put calculator, our premium is $127 that we are collecting today. Our delta is a 0.29, which basically means there's a 30% chance that we're going to have to buy Rocket Lab at $17.50, but there is a 70% chance that nothing happens and the option contract expires worthless. Those are the kind of odds I like to play with, okay? So our collateral for this trade is going to be 17,000 or 1,750, right? And you could see a fantastic, juicy return of $7 or 7.26%. And that is what I love to see, especially when I am doing a smaller account trade and an extremely volatile stock. Now, full disclosure here, guys, Rocket Lab is a more speculative play. The more volatile stocks you go into, the more speculative companies you go into, the juicier the premiums are. But with that comes higher risk. Rocket Lab can, potentially blow up a bunch of rocket ships and, the sentiment tanks on them and whatever, something crazy happens, okay? As opposed to doing this on safer stocks that are most likely not gonna, have such massive swings, okay? So, but that is one of the reasons that I love Rocket Lab, because of those absolutely juiced up premiums. I know a lot of you guys in the community like to trade Rocket Lab, and that's why I wanted to mention this one for you guys that you still got that little bit of an options buyer in you. You just need to gamble just a little bit, right? To scratch that itch that you got, right? Even though selling options is all and usually in our favor, right? So those are really, really nice, especially with the 0.29 delta. Some basic technical analysis that I like to do is I will go to the chart section on Rocket Lab right here, and you could see, wow, we are actually towards the top of Bollinger Band. I usually look at like the 6-month chart as well, guys, just see where we're at in like the last like year and stuff. So we're kind of we're far off all-time highs. That's for certain. But we could see we're trading right in that mid area of the middle Bollinger Band and top Bollinger Band. So not a great setup for a cash secured put. We usually want to do our cash secured puts when we're at the bottom Bollinger Band, cover calls at the top, but you could see, look how juicy those premiums are, even with this trading where it's at. If it was towards the bottom Bollinger Band, we'd be over 10% most likely on that premium and collateral return, all right? Moving on to number 2, okay? And you guys hear me talk about it all the time, but I'm going to keep talking about it. It's American Airlines. I think this is a fantastic company, especially for beginners getting into the wheel strategy, selling options, and doing quad option strategy, okay? So let's go take a look at AAL, okay? Me, personally, this is my favorite airlines. But obviously go do your own due diligence. I'm going to go and take a look at what the puts are looking like and go out to that same date. And we're going to try to keep this all the same as far as like deltas are concerned, okay? To show you guys what the differences really are when you go from like a super volatile stock to something that's a little bit more riskier, right? Let's look at the 8.5s, right? 8.5s is a 0.26 delta. Let's look at the 9s. 9s is a 0.35. Okay, man, that's a big choice. We'll do the 8.5s. So there's a 0.26 delta, a little, safer on the delta side, right? Our collateral here now is 850, and we're collecting $37 in premium. So I'm going to put my $37 here. We are putting up $850 in collateral for a nice, decent return of 4.5%, but far off from that 7%. We almost had it double on Rocket Lab, right? So these are the things you're going to have to be, weigh your own risk tolerance levels to what you want to do. And of course, guys, you can have as many contracts as you want. Here's if you had like 4 contracts, you collect 148, but you need $3,400. Again, we're speaking more for small accounts, guys here. So again, for AAL, you need $850 and you could start a cash secured put. Collect about $37. I know some of you are like $37, but listen, it takes money to make money. This is called, I like to look at this more of like a snowball effect on my selling options portfolio, because it is, right? Every month you're actually making real income, not paper gains, bro. Like I get in so many arguments on social media with people about, they're like, hey, but what if it crashes even lower? You missed out on that. Well, number one, I'm still naming my price. If it's a company I believe in, I believe it's going to hit all-time highs again, and I got paid for to buy it at a discount, which is all fine by me. And like, so for me, this is the point of this, right? Is to create income. That is the sole purpose of selling options, not just looking at your computer screen on paper gains. Those aren't gains. You don't make money until you actually have real money that you can go use and spend. Okay. I'm sorry. Okay. I'm sorry. Gotta say it. Next one that I want to talk about right quick is Honest Company. Okay. This is now, right? Definitely. This was a bit, whoa, I just kicked my camera. Sorry, guys. So this is more of a personal kind of stock that I really like. Some of you probably aren't going to like this company. Me personally, we use Honest products for pretty much everything for our kids. Our friends all use Honest products for everything, wipes, diapers, blah, 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 blah. You guys, some of you know my personal story with Honest, kind of how it got on my radar years ago. But it is a very, very low cost stock, okay? $4.39. Let me show you what the premiums are looking at like that. Right now, one of the books, guys, and I'll leave it. It's in the description. One sec. Oh yeah. Go pick up this book. The link will be in the description. And this is that Peter Lynch book, One Up on Wall Street, and it is the best, in my opinion, the best investing book you can buy. The reason Honest came up on my radar was because I actually read that book, and it was like, hey, start paying attention just a teensy bit more in your everyday life, like on what products people are talking about when maybe you're at the office or your wife's talking about. And that's how this got on my radar. When I had my first daughter, I was like, what the heck is Honest? Like what is this thing? I've never heard of this, right? I didn't know there was like another competitor to like the Pampers and Pull-Ups or whatever all those other companies are, right? So for me, that's how it got on my radar, because I started paying attention a little bit more to my everyday life. And that's how it got on my radar. And that's like a big topic in Peter Lynch's strategy. So do that for yourself, right? Like when you hear people talking about like, maybe some new software that's getting deployed at the company, or, maybe your wife's talking about some new company, right? Like and get it on your radar. I'm not saying go invest in those things, but like put it on your radar. Maybe that's going to be a win for you, right? So let's go take a look at the Honest options. We'll sell a put. And we'll go out 28 days. Obviously, not a super high traded stock, so not many options, but you usually get the monthlies right here, right? Wow, we can't even do, because it's the market. Dang it. The market's closed today. That's why some of these aren't going to show us it. So let me see call side. Let me see if it'll at least show us some call side stuff, right? It does show us some call side stuff, but we're not going to get into that. But usually premiums are okay. You can usually do the 4s and 5s and stuff on Honest, but the market's closed today, unfortunately. And fortunately, of course, it is Good Friday, so that is perfectly fine by me. But Honest is one of my favorite companies to do it on. Not a super high traded company, but it's a great company that gives a fantastic premium return, similar to like a Rocket Lab that you would expect to see. Okay. Next one is SoFi. Love SoFi, guys. This is a fantastic company that I believe is the perfect balance of risk and like reward, in my opinion, right? Like we have American Airlines, like I believe is safe. That's my opinion. I believe is safe. And then we have like Rocket Lab, right? Which is like high risk, high volatility, juicy premiums. And like SoFi is like right in the middle, in my opinion. Okay. So let's take a look at SoFi premiums and what those are looking like. And we'll go over to the put section as well. We can see it's been on a little bit of a run. Sell a put. It was at like $9 like earlier in the month, which is crazy. Or I think it even hit $8. So we could see what our premiums are looking at here. Let's go find that like roughly 30 delta, 37, 31. 25. We'll go with the tens. So we could see we collect $71 on our $1,000, right? So 71, and all these calculators are free in the Facebook group. I don't remember if I said that. Link will be in the description. It is free. Everything on this channel is free unless you want one-on-one time with me. I think we can all agree with that, right? And we get a nice return. Juicy return of 7.10%, annualized 74%. That is fantastic. Now, full disclosure, I'm assuming a lot of you guys already know what the wheel strategy is and like have done it a few times. Like, I only like to look at this annualized return to decide when I close out my positions early. It's just like a little extra for me. You're not actually making 74% a year. I mean, there's a chance in reality that you could like do it 12 times, do this trade 10 times over a course of a year and collect $740 in premium. There's totally a chance for that actually happening because it is, again, only 10 trades. And if you're sticking to roughly the 30 delta, but oftentimes you may get assigned and then do covered calls. So I want to just be full disclosure of that, but that's okay. Okay, that is okay to get assigned, okay? So great ones on SoFi as usual. And our last stock, which I talked about in another video, and I believe is fantastic for quad options because we got a juicy dividend, and that is Ford. $9.63 share price. Let's go take a look at what those premiums are looking like on Ford. And we'll go over to the options chain. Had a little bit of a run up 2.5%. So again, not the best time to sell puts, but still a great premiums that we can see. Let's go find that 0.30 delta or at 0.31. Hit the nail on the head. We'll collect $35 on $900. So $35 on $900 gives us about a 3.89%. Kind of the lowest of them all, but in my opinion, around 2 to 5% per month on your money is damn good. Now, again, you have to have reasonable expectations here, guys, because oftentimes a lot of these contracts at that 0.30 delta, most of the time they will expire worthless, meaning you will walk away with the premium. But don't forget, you do have that chance of assignment, which in my opinion isn't a bad thing because then you can run the covered call strategy on those as well. Guys, if you enjoyed today's video, make sure to hit like, follow, subscribe. Also, take a look down below in the description of today's video. There's a ton of resources, and make sure you join our free Facebook group. It's a vibe in there, and all the free resources and stuff that I share on the channel, calculators, all that good stuff is in that Facebook group. Remember, guys, sell options, collect premiums, repeat. I will see y'all tomorrow.